Welcome to the Traders Show. This episode is brought to you by Paperstone.
Greetings traders and welcome to the Traders Show. So as you can see, I'm here with the boys and as usual, we are always here to give you content. Thank you guys for joining us on this podcast. I hope you enjoy what we'll be sharing today. So the topic of today is central banks around the world and what has been happening around the central banks around the world. What decisions are they making towards the current market environment in terms of inflation? So what are central banks doing around the world? So we'll be talking basically about majorly fundamentals. So it will be majorly a fundamental topic to discuss majorly inflation, unemployment, interest rates, and what central banks are doing globally. So I'm glad to be joined by my colleagues here, Ken and Caleb. I think they should introduce themselves before we go into the topic.
So hi guys, hope you're having a wonderful time wherever you're watching us from. So like Lawi has said, today we're going to be talking about central banks, inflation, interest rates, and basically the fundamentals that drive markets up and down. I think we are currently in a period that will be remembered in history. If you've been trading markets for some time and you understand the context of markets, it's very, very important if you're trading markets to understand how markets have always worked. And by that I mean you need to go back all the way to the 1920s and try and study the cyclical moves up and down and what caused them and what impacts they had in the general economy and in people's livelihoods and different things that just happen in the markets. In line with that, I think currently we're in a period that is historical. The last time we had such high levels of inflation was 30 years ago, 40 years ago in the 1970s. And now we're in 2022, I think. Inflation is at 9%, 8%. We're trying to bring that down to 2%. This is not going to be a very, very, very easy thing to do. And I think the central bankers across the world have pointed out that it's not an easy thing to do. So that's what we're going to be talking about today. We're going to be sharing the role of the central banks in moving markets, the role of interest rates in driving economies up and down, boom and busts, and just sharing with you what has happened historically and what is currently happening, and what we think and how asset prices will be affected. So my name is Ken. Alongside me are my two co-founders. So I'll pass it on to Caleb.
Yeah, what's up, guys? So welcome to today's show. So my partners have already shared much about what we'll talk about today, and it's true. We'll talk about central banks that are around the world, what names they go by, what roles they have in the country, and such stuff. So it's very important. There's no economy that can run without a central bank. So banking system is very, very important. No economy can thrive without. All the countries in the world have a central bank, just the same way all the countries have either a government. Okay, so government and central banks go hand in hand. They're both equally powerful because they work together to do different stuff. The government is in charge of fiscal policy, central bank in charge of monetary policy and all that. So this is important stuff. You as a trader, as an investor, or as someone who's looking to invest in someone or anything, not even just as an investor, anyone around the world, it's important for you to understand how this banking system works, because it comes and affects everything. Right now we are seeing prices around the world going up, inflation, interest rates are going high. So it's a good knowledge to have at the back of your mind, and that's what we're going to share with you guys today, and I hope it helps. So Taras.
Okay, so first of all, I think even before we get deeper into what central banks have been doing, I think it's important to explain the role of the central bank.
True.
Like what does the central bank do? What is their main roles? Because actually most central banks around the world have similar roles. Or actually, most of the same roles.
Yeah.
Like very, very similar roles. Like they are structured in a very, very similar way, all globally. And it's first of all very important for us to understand their role and what they do to control what they've been given, like the mandate they've been given to do. So
then after that, remind me, we can also talk a bit about the Feds and how they're a bit different.
Okay, yeah.
As a private,
sure. Yeah. Actually, the history of the Fed is a bit very, very complicated and not very straightforward. Mm-hmm. A lot of people don't know about how the Fed came to be. The Fed, guys actually think it's a family business.
Yeah.
Yeah, there's some people who think the Fed is a family business, but
so we'll talk about it as well.
I think we'll talk about it moving forward. So I think I can start with that. Central banks around the world, basically, I always teach this in my fundamental class, and most of the people I teach, they get surprised that it should be the role of the central bank governor to control the economy, not the president.
Central bank governor.
Yeah, like to control how the economy is moving, and not the president. Like the president doesn't have so much power to control how the economy will move,
Yeah.
but the central bank governor. So even here in Kenya, a lot of people think about, unemployment is so high, Uhuru, Ruto, like, but
There's a lot of things happening.
inflation again, unga imefika to 30,
Blame it on Uhuru.
Exactly. Like you're putting blame on the wrong person. If you look at US, these guys are developed and they understand who to put the blame on.
Yes.
And every time the central bank, the Fed chairman, Powell, comes to speak, the whole world literally stands to listen to him.
Yes.
Here in Kenya, when the central bank governor speaks, very few people will be interested in listening what he says. He won't even trend on Twitter. But whenever the president is speaking, he will trend. But in the US, when the central bank, when the Fed chairman is speaking, literally, not only in the US, even us here as traders in Kenya will listen.
Yeah.
Like, what will this person say about markets, or maybe about what he can control? So I always say central banks around the world are mandated to do two things. Central banks are supposed to control unemployment rate. So unemployment is one of their roles, controlling unemployment. It doesn't have to be too high. It's their role to bring it to a level whereby job market is very, very stable.
Yeah.
In that, households are not suffering to get jobs, and companies are not suffering to get people to hire. That is a stable job market. If you look at now, that is why also you can't really kill unemployment like to zero, because companies will struggle also to hire. So they always like to keep it low but stable. So for them, it's for the US, I think, to keep it below 4%. 4% unemployment rate is their goal, to keep unemployment rate before 4%. That is their main role. So whenever that number jumps to maybe to 5, 6, 7, 10, 20%, it's red alert. So they have to
Red flag.
a red flag. So they have to again sit down and look how they'll structure it back. Apart from unemployment, they have to work also on controlling price stability. So they're supposed to control price stability. Basically, that is controlling inflation. Basically, how are the price of assets moving? Is it moving high too fast, or not moving high? So they also, when there's no inflation, basically it shows there's no growth. So you can't also kill inflation to zero.
Moderate.
Yeah, moderate inflation. Basically, things are growing at a moderate rate. So for inflation, they like it keeping it below 2%. So those are their main two goals: keeping unemployment below 4% and keeping it inflation below 2%. That is now for the US markets. I think also for UK is similar, 4 and 2, 4 for unemployment and 2 for inflation. In Kenya, I really, I'm not so sure about the number. Like, what is the target of the inflation rate here in Kenya for the central bank? What is the stable? I'm not so sure, because currently I think we are at about 6-7%, and it's not really worrying for them. Interest rates are also pretty high. I think about 7.58% from the central bank. So also
for Kenya.
For Kenya, about 7.5% interest rate.
It's actually 7.5.
Yeah, 7.5 interest rate here in Kenya, which is pretty high. Like relative to other economies. US I think is leading now, 3.25.
Yeah.
UK
is 2.25.
2.25. Japan negative 0.1. We'll talk about that also. Why is it at negative? And Kenya is at 7 point something. So we also have a relative high interest rate. And now it's majorly the central bank to look at those two things. Like, how do we use the interest rate to control how inflation and unemployment will move? So those are the two things that central banks look at around the world. And it really affects us as traders, because it affects directly. Their actions affects stock markets, currency markets, commodity markets. It affects markets directly. So it's important for us to be at par or to understand what's happening in that sector, like fundamentally what's happening in terms of interest rates, inflation numbers. Like, you have to be really always understanding what's happening fundamentally. I always teach in my class, I believe, I'm not saying it's true, but I believe you have to, at least, if you're using technicals, you have to have fundamentals on your side also. Like, you have to understand some fundamentals. That is why in our courses we always teach fundamentals very deeply.
The second, actually it's the
second
after
class.
Introduction,
Yeah.
it's the first main
Exactly.
class.
First main class. Like, you have to understand how economies works. The moment you understand how economies works, you can now basically take advantage of both technical and fundamental movements in the markets.
Paperstone gives you access into the global markets with more trading opportunities first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. Paperstone Markets Kenya is regulated by the Capital Markets Authority. To open an account with Paperstone and begin your trading, click the link on the description below.
Like just an example that I had for this week, this is something I've been also trying to put into my trading, is to understanding when not to bet against the fundamentals. Like for this week, I had a couple of setups to trade technically, but the fact that I knew fundamentally what's going to happen on Wednesday, I got a setup on Monday on Dow Jones and US 500, also on GU. But I never really partook on the trades because fundamentally it was very, very strong against the technicals. In the markets, you also need to understand what market environment is fundamentals reigning over technicals. What market environment is now fundamental and technical at least stable. And I always say when fundamentals are reigning, like controlling, like raining, not raining like rain, but raining. When fundamentals like are controlling markets, you really need to follow the fundamentals because our markets follow fundamentals heavily. And you don't need to bet against fundamentals. Sometimes maybe you can bet against maybe a technical trend, but it's very, very difficult for you to make money betting against the fundamental trend. So for this week, I had a couple of setups for buys on US 30. But the fact that I knew on Wednesday there's going to be a very, very high impact news coming out on Wednesday, I knew that, and I knew the effect of that interest rate. So I understood that they're going to raise rates by either 0.75 or 1%. So I decided not to take that trade. Like I was like, for this week, let me just not be against the fundamentals. Sit out and of course watch markets tickle down for the week. Probably next week maybe I can even get better setups. You see, so in trading you have to understand both aspects, and that is what we are going to try to pass along to you guys in this podcast. Of course, we won't share everything, but we'll try do a good job to pass along what central banks do to control markets.
Yep. So for me, I think I'll start off. I'll pick where you have just stopped, which is on the fundamentals. And I'd say like for fundamentals, when you look at it, or for anything generally, I think I found that there is one style of thinking or one way of generally of looking at something, and it is what are the first principles that can be applied to a particular topic. Now, when you come to fundamentals, the first thing you have to do is to look at what is the most important data point that is going to control everything. And that data point, unfortunately, is interest rates. And interest rates are controlled by the central banks. Okay? And for you to understand why interest rates are very, very important, I think you need to go back and look at the business cycle to understand the periods where growth comes in and how growth happens. And growth generally, I find it very, very funny that, it's not funny, but I think many people don't understand that much of development or much of progress is made by loans. It's not made by loans.
Loans. Okay.
Loans. Credit. You don't build apartments on savings. You don't build big companies on savings. You don't
build an economy on savings.
You don't build an economy on savings. You don't build a country on savings or taxes. You build or you develop the country using loans. Okay?
Yeah. And to add on that point before you go further, something that people should know how the governments work. For example, especially the Feds, because those are the people who've been following. Feds and the Fed. Well, Feds is Federal Reserve. Okay, it's the Central Bank of America. So an important thing I wanted to say is that the government cannot create money in the US. So what you're saying, for the government to do anything and they need money and they need it through printing, they have to take it as a loan, as an IOU.
Exactly.
From the central bank, the Feds. Yeah. So the Feds loan to the government at a certain percentage. They do whatever you're saying, infrastructure, whatever they have, and then they pay it back slowly to that interest. So it's not only us people who are borrowing money.
That's how the capitalist...
It trickles down. It's how the economy runs. Yeah. The whole economy around the world runs on credit.
Exactly. And that's why you shouldn't be proud at all that you don't have loans. It's not not something that you should be proud of. You should actually try to craft your income such that you can be able to access loans. Because the bigger the loans you can be able to access, the more you can develop yourself. Okay? But anyway, so when you go back to loans and you try to think about if you get a loan, what's the yield on a loan? The yield on a loan comes
Talk
from
about credit, not loan.
Yeah, okay, credit. Loan kwani inakaa mbaya.
Wanakona deni bro.
Let's say credit, bro.
Yeah.
Okay, so like I was saying, credit, then Lawi has said we use credit. So when you have credit, the only way someone who's giving you credit is going to make income or to make money, because obviously there's no money for free again. So if I'm giving you credit, you have to pay me at least with some interest rate. And those interest rates keep on fluctuating. When there's so much liquidity, when money is easy to find, rates are very, very low.
True.
When there's tight liquidity, money is very, very, very hard to find, rates go
Up.
Because now
That's what we call it, hockey stone.
Exactly. Hockey stone is going up, dovish stone is coming down. Now, once you understand those two things, it becomes very, very easy now for you to be able to understand what the central banks are doing relative to what the economy is doing. Because if the economy, like right now, is heading towards a recession, the next thing that the Federal Reserve or any other central bank has to do is to think about how are we going to come out of a recession? How are we going to bounce back and come back to a period of growth, come back to a period of stability, come back to a period where unemployment is low, inflation is also down. And the way they do that also is by controlling the amount of credit or the amount of liquidity that is in the system. So when things are tough, they pump in liquidity, like what happened during the 2020 COVID crisis. Yeah. When COVID started, we saw markets just go down almost 40%. And the Federal Reserve and many other central banks across the world stepped in to lower rates. And that resulted in a lot of liquidity, a lot of pumping in of money. Stock markets did exceptionally well. If you look at the last 2 years, the markets went up over 80%, I think, for some markets.
So to explain to you guys better what you're talking about during COVID, when the Feds lowered interest rates, which we talk about it, the ZAP,
Zero
interest rate policy.
So now money is free.
Money is basically free.
Yeah.
So that means the government can borrow from the central bank for free, and they print a lot of it, and now they pump it into the economy. And that's why you're seeing that the government was saying they're doing stimulus checks. The government was doing things like bailing out companies, saving companies. So now credit is cheap, what you're talking about. And now so it's trickling down. Since the government central banks have pumped money, these guys have borrowed from them at zero interest rates, then it can trickle down into the economy. And what you're saying now, there's a lot of liquidity in the market.
Exactly.
And the opposite happens now. What?
Exactly. So the opposite happens when the growth comes back and things are going so well. You know, the economy moves up generally over the long run, but it goes up and down in
cycles,
sort of boom and bust. Actually, if you look at like the theory of how George Soros believes you should invest, he believes that there are boom and bust periods, and you should be able to recognize when the booms are coming to capitalize on them and when the busts are coming to capitalize on them. So he was a very, very big believer in cycles and those cycles being inevitable. Because a cycle happens because it's caused by the previous thing, which is caused by the previous thing, which is caused by the previous thing. So a cycle is something that, if you're in a cycle, it's something that to stop, it's not so easy. You need to really understand what is causing it from. You need to understand the context before you go back to the content of what is really, really happening at the immediate point. So that's how central banks will now sit down and they will work to regulate inflation, like Lavi said, and to try as much as possible also to have growth and to bring unemployment down. Now, in that effort to do that, sometimes things happen that cause them to do things which they didn't plan. For example, like we were having a conversation with Lavi some time back, and we were asking ourselves, what would happen to this current environment if we had another crisis like COVID?
Right now.
What would the central bankers do?
Drama in the market.
We are in a very, very high inflationary period.
So that's a black swan. You never see it coming.
Exactly. That's
just
a black
comes again.
Just comes again. Or you see there is a war. Let's say Russia decides we're not stopping at Ukraine. We're going to Belarus, other places, and it becomes like a big war. Like, let's say a world war. What will central bankers do? That's how you go into a depression. That's how depressions happen. Like if you go back to the periods of the 1929s when you had the last depression, those were some of the things that happened. We got to a point whereby we have so many problems, and how to solve those problems is directly in conflict with each other.
Yeah.
So it becomes very, very hard for you to solve the problem well,
Yeah.
resulting in a very, very dangerous environment in general.
Yeah.
So like right now across the world, I think all central bankers are hiking rates aggressively. I think we've seen rates go up by 50 to 75 basis points across very many central banks. This week we saw Bank of England do a 50 basis points rate hike.
Feds.
The Feds did a 75
75.
basis points rate hike. Previously, we've seen the ECB start. But Japan is the only country that is not hiking rates.
And theirs is actually negative.
And they don't
What
have
does-
inflation.
What does that mean?
It means if you put money in the bank, you pay them for putting money in the bank.
And it's working like that.
Yeah, it's negative rates. So if you they don't want your money,
What's the other option apart from putting money in the bank?
you invest it.
Invest it. That is the idea they have.
The thing about investing, it's not how can I access a loan?
You can
No.
basically what they do is they try to promote borrowing and not saving.
Oh,
That is why if you look at I think Japan has one of the highest debt to GDP ratio of 266%.
Percent.
Basically, they've borrowed 266% of their own GDP is debt. Because it's easy to borrow.
Kenya, what's the debt to GDP ratio by there?
69. We have about almost $70 billion in debt against 110 billion economy.
That's also a big one.
Our economy is just $110 billion.
as Elon Musk is $200 billion.
As a person.
Apple alone is a company with a market cap of 3 trillion.
3 trillion.
Yep.
Yeah. So
So,
we're pretty tiny economy. Pretty tiny economy.
Emerging markets.
That is what they try to do. Basically, they try to promote growth in the economy. And at the same time, that is what other central banks governors around the world are struggling to understand, how they've also maintained their inflation rate very, very low.
Yep.
Because there's no inflation in Japan.
In Japan.
2.5%.
But I think part of the reason they're
Negative rates.
able to do that so well was COVID never hit them that hard. It wasn't that hard for them. They handle it so well. Like Australia is also commended for doing a tremendous job of handling the pandemic in the best way possible. Like the pandemic was not as catastrophic as it was in other places. So it like, as much as there was pumping of money, as much as people lost jobs, as much as companies died, relative to other countries, they did the best to try as much as possible to filter out some of those things. So Japan is the only country whereby we have negative rates still. They've not done any rate hike. In fact,
16, I think.
what they did is actually printed some money some time back. And then on their last meeting, they said they'll start buying back again some of those yen to just dry up the market a bit. But people are arguing that also that might be quite hard to work, especially in the long run. Markets will tell us. But at least for this last week, we've seen Euro yen precisely came down. I think dollar yen also went down a bit. The dollar is actually at 113.
The dollar DXY.
Yeah, the DXY. So the dollar is actually trading at a very, very high place.
High level, yeah.
But I think rates have also not been this high for so long. So I think the two just justify each other. And I don't know how far we'll go. It's now a question of how far.
Exactly. That is what we were talking yesterday with Vimal. Like, how far will the dollar rise?
Yeah.
Like, of course,
And
we
for how
expect-
long?
For how long
Just
will it
going.
rise? For how long will
Inflation be up.
We started seeing the curve of inflation going down. We started seeing from 9.2 to 8.5 to 8.3 now. So we are seeing inflation go down a bit. But for how long will they keep raising rates aggressively? And how much will that push the dollar higher? That is what fundamentally and technically we're trying to now look at. How far can the dollar rise? And also how fast, when maybe will they slow down on raising rates? So I think those two things is what most traders are looking into right now. Like how much the dollar can rise, and also how central banks, basically the Fed, will react to the slowing down of inflation. So I think also in UK it went down a bit. I think they had on Tuesday, I think there was an inflation rate from UK went down a bit. I think almost from 7.7 to 7.6, not so much. But that is what we are keeping our eyes on currently, and we've seen it affect markets strongly. Actually, this week we've seen very, very huge drops in markets. I think stocks have fallen about more than 5% for the week.
Yesterday, GBU closed at 3.5%.
Down.
That's a currency dropping for 3.5% is
Unheard of.
Oil is down 5%.
very, very high.
Seven.
Oil was 7.
No, it closed at 5.
Closed at 5.
Closed at 5%. So markets yesterday were very, very basically last week were very, very volatile because there was a lot of fundamental moves happening, and I think now maybe we can talk about maybe why did the pound fall that much? Like what made the pound fall that significantly? Like why has 3.5% drop? And I think maybe I can just put my point there is I personally believe I'm not saying in markets it's about speculation. This is not a surety. That is my idea.
There's no certainty.
Speculation and risk.
Uncertainty, yeah. Maybe my idea of why it fell that much is because we always talk about what do we call it's disappearing. But basically, if how's the word? If a currency has a lower rate than the other one, carry trade, exactly. For me, I believed it was more of a carry trade. The moment guys saw dollar yield more higher than the pound, that is what maybe made the pound sell off very, very much. Also, people were expecting the pound to also rake hike rates as aggressive as the Feds, but they never did that. Only 0.5%. So I think that is what made pound really, really not become attractive against the dollar. And most people now chose to have the dollar for the week because the fundamentals came in the same week. Most times, actually, if you look at pound and dollar fundamentals, they come a week later. Like if today we'll be having US rates, next week will be pound rates.
Yeah.
But this time they came in 1 week. Yeah, in euro, yeah. Actually, most times euro and pound are almost the same time. Then euro, US almost an hour, so not an hour, but a week later.
Yeah, US sometimes you can find it's also almost sometimes same week with BOC.
Bank of Canada. Yeah, Bank of Canada. But for this week, we had the same rates. Both countries are giving rates for the same week. And I think that is what made a lot of traders commit to the markets and buying a lot of dollars. I think if you look technically at the current, the weekly candlestick close of the dollar, it's very, very strong.
Very bullish.
Very bullish. Like markets are very, very strong bullishly. We've also seen gold drop. I think gold closed at 16, 50? 43. Yeah, I think I saw about 16, 50 something. 1643. Really, really low. I'm expecting gold to move even lower, maybe another 1,000, 2,000 points in the long term, probably in the next few months. And it's very, very interesting when you understand markets in both perspectives, like
fundamentals and the technicals.
And technicals. Very, very interesting.
It becomes an easier game to play.
Easier game to play, exactly.
Because trends, I actually just interfere with you, to just interrupt kidogo. Trends don't change because of technicals.
Yeah, they don't.
Trends ati ligonga support imegeuka trend. Haiwaki hivyo. A trend will always reverse because the fundamentals have changed, the policies have changed, the environment has changed. Yeah. That's how trends reverse. Because if you look at, for example, the current trend to the downside, it started in November when the Fed started saying we're now in a period of hiking rates. We're now looking forward to hiking rates and taking the rates higher. And that's when markets started going down.
And dollar started picking up.
Yep.
I think that is much of what I had. Actually, I interrupted on Caleb's point, but that was much of what I wanted to
Ken's point.
Yeah.
I'm yet to start mine's.
Okay. You can go.
You can go.
I have a couple of things to say. I want to talk a little bit about the story. I like stories, as my boys like saying. Stories, we'll talk about it. But one thing I also want to say is how interest rates affect the market. I'm a trend trader. And I remember a long time when we started trading, I remember we never used to give too much attention to fundamentals. I remember actually Ken when you were coming and saying, you guys, we need to study these things. We sit down, let's talk about interest rates. Those days we were too ingrained into technicals and how technicals work. We thought that was everything is priced in. Okay. But yes, everything is priced into the charts. But first you need to understand fundamentals. And these days, and understanding fundamentals it's fun. It's interesting. Understanding how the Feds are pumping interest rates, how this economy might crash, how we're seeing countries the currencies became worthless because how the people are controlling the monetary system in the country. So if you look at what Taras was saying, I also wanted to touch on it. Carry trade is normally when you're looking at two economies and one economy has an interest rate higher than the other one, which means it's yielding much more, people tend to rush for that one. For example, the example Taras has given, GBP against USD. So the pound right now has a 2.25% interest rate and the US has a 3.25, meaning the interest rate is, if you take those two compared, the United States dollar is yielding 1% higher.
Yeah.
Compared to that. So many people rather sit and hold on that. Okay. So fundamentally wise, interest rates are actually the backbone of all markets.
Mm-hmm.
Yeah.
All markets, crypto, bonds, real estate,
especially bonds.
anything.
Bonds are very strong with interest rates.
Exactly. Currency, stock market, everything, the interest rate is the backbone of it. And if you understand that, you can be ahead of the curve. Okay. Technicals are a bit lagging sometimes. For example, when we were exiting cryptos, it's when Ken came and said, hey, if around the world, because the Feds had just started talking about tapering, slowing down on pumping the QE, stopping that, and then also slowing down on that, and then also they were talking about in 2022 March they start increasing interest rates, and that was last year November. So when we had that news, we came out fully all our cryptos, and that was the very top of the market. Okay, because fundamentally the market is going to price in and cater for a bearish market in all markets. Okay,
but want them not to assume that it's that easy to get in and get out.
Yeah, it's not that easy. It's not like now,
doesn't always work,
because technically we had also looked at a couple of things. I remember that time it was forming a double top on Bitcoin. So we were looking at other patterns as well, not just they said this and started acting irrationally, let's do this and that. So right now with what we're seeing, so when interest rates previously, what Ken was talking about, COVID time, when interest rates went low, how did it affect the market? The US economy could print more money. More money was entering into the economy. People were being given free money. Stimulus checks were being given like hell. Okay, so everyone was getting money, free money. No one is working for anything. Everyone is being given free money. Where was that money going? There's a lot of money in the economy, and when there's a lot of money in the economy, people are free to do a lot of things. People shop more, meaning companies are making more money. People are investing more because borrowing is cheap, so people can do that. Borrowing is cheap, so people can start businesses or grow businesses. So many companies are taking loans. So during that time, we saw the V-shaped recovery on stock market. So the Dow went into new highs. Broke the 30,000 barrier, which was pre-COVID high, and then broke all the way to 37,000, which topped S&P 500, Nasdaq, all those things. So at low inflation rates, you're easily to see a thriving economy. Okay, things are going so well, and people now start thinking things. Cryptocurrency, was cryptocurrency that time? It was that time, yeah. Cryptocurrency also was shooting up. That's the time we saw Bitcoin coming all the way from lows of 10,000 and all that, all the way up to $68,000, and Bitcoin, all the others follow it. So in low interest rates environment, it's easy to see things really skyrocketing. Okay, and then vice versa happens. What we're seeing now, we've been in this bear market, cryptos, cryptos, which is the likes of Bitcoin, stock market, all those things are in a downward trend because borrowing is cheap, so people are not really borrowing to invest that much. It's more expensive to pay back loans. Okay, also the fact that people know in a high interest rate economy, people want to sit on cash, so cash sort of becomes king. So people are also things are tight, so people are not spending money how they were spending before. So that's why you're seeing the stock markets going down, because it's supply and demand. That's how markets work. So there's no demand. Yes, there's demand, people want it, but no one wants to buy it. Okay, so in such an economy where things are tightening, it's easy to see those things going down. And that's why it's not because Elon Musk is selling Bitcoin and that's why Bitcoin is falling. Okay, it's because of the fundamental aspects. Serious, people think
it's because Elon is selling.
Is it true?
Mambo ni mengi.
Ya dunia ni mengi.
Comedy.
It's comedy central. We look at people giving all these excuses, and Really, that's not what it is. So we normally look at, and that's why now when people are sitting on cash, that's why you're seeing the dollar rising. People are sitting on cash. It's yielding more money compared to other things.
Yeah.
So
right now, by the sitting on cash is quite good. If
yeah,
you
cash,
look at
nice
many other
thing.
investments, like if you're in stocks, the stocks have actually lost this year.
Exactly.
Yeah. If you're in cash, you're better off.
And then when you're sitting on cash, not any cash again, it's dollar. Serious. If you're
For it
sitting
to
on the
yield the
pound,
highest. And the pound by
has
the
been
is actually
going down.
losing.
Euro we passed. We were talking about
parity.
yesterday. It parity. We went with 0.98 now.
But you know, they're not as aggressive as the Fed is.
Yeah, they're not.
That's why those carry trades are working so well. Other currencies are being dumped for the dollar.
Paperstone is an award-winning online global Forex and CFD broker. It offers unparalleled service, exceptional pricing, and quick execution speed.
So, in a nutshell, now you can go and do more research on that and see how different how interest rates. If you do research, see how interest rates affect the oil market, the gold market, stock market over the years. Okay. Then another thing was also researching here. If you look, now I want to give a bit of one thing I should mention before I go to the story part. I want to talk a bit about the Feds. If you're looking at different central banks, they almost have the same work, but work differently. Like the Feds, we'll talk about it. It's more of an independent arm compared to other central banks around the world. So they sort of act independently. So we'll talk about that. I just wanted to mention a few. For America, they're called Feds, England, Bank of England, ECB,
European Central Bank.
European Central Bank, RBA, that's the Reserve Bank of Australia. We have the BOC, which is the Bank of Canada.
RBZ, Reserve Bank
of New Zealand, Japan, BOJ.
People's Bank of China.
That's China.
Yeah.
Bank of India.
And People's Bank of China is, I think, the biggest bank around the world.
Yeah.
It is the biggest assets under management.
Like the amount of money deposited.
They have 5.8 trillion
You should also talk about
assets under management.
You should also talk about gold reserves that central banks keep, because many people don't know about that. Central bankers are some of the biggest holders of gold across the world.
Yeah, across the world. Yeah,
That's
if you look
true.
at the reserves of gold that the Federal Reserve has,
Yeah.
if you look at actually
It's
in
part of-
2018, I think the People's Bank of China was one of the fastest acquirers of gold. They were buying the most during that time aggressively. So also central banks keep some gold for reserves. If you want to understand that, also go back to history, understand that gold is God's money. Long time.
God's money.
God's money. That one can't be taken away. It's not controlled by central banks. It's, you know, there are things called currency devaluations, like what is happening in Japan. It could get to a point where we're no longer using the dollar and we're using another currency, or we get to a point where we are no longer, you know, people don't understand that. Let's say like in the UK, the pound was not the currency that was being used before. That time they were using Deutschmarks. Remember Deutschmarks? The ones in Germany. So it was used in Germany and in the UK. Then they had a currency devaluation in the 1992 case when George Soros made over $1 billion. And then from there now they had to change, and they came in with the euro and the pound. That's how those currencies were born. So currencies keep on changing. And that's why central banks will have to keep some gold reserves, such that in the event that they're changing the currencies, they can be able to acquire the next one, sort of like have something
Dominant.
Just that was just a by the way.
Okay, so on the next one, so I was just mentioning a bit of those names of banks, but another thing I was looking at over here, if you go and research and look at the world's most powerful people, okay, according to Forbes, the world's most powerful people, we have top 3. This was, I don't know as of when, I think it was still when Trump was president, because we have number 1 Xi Jinping, then Putin, and then Donald Trump. Okay? I think
US banner.
And then Angela Merkel, and then Jeff Bezos.
That one is for Kitambo.
Yeah, this one is a bit for Kitambo. But you're seeing the top 4 people are people from politics.
The politicians.
Politicians. And also top 10 is a lot of politicians. But
then would you say money or power? Money or politics? Which one gives you more power?
Politics. Both. Wow, that's a tough one. Good question.
Should think
Money
about it.
or
Money
politics?
or politics.
Politics
You know-
gives you...
Remember when I was reading from Originals? He said, if you try and exercise power, okay,
Without money.
no, without status,
Mhm.
then people won't respect you. So even if you have that power, which is politics, but you don't have status which you can get through wealth, okay, people won't really listen to you. For example, if Ruto wasn't rich, you couldn't go against the state. So politics, yes, is powerful, but before that,
You need money.
a lot of it,
So you believe money is more powerful than politics.
yes.
That is the conclusion.
But how do you put that? Okay, yes,
'Cause
makes a lot of sense.
I believe the people who are running the games are puppets of people who are controlling the economy
Exactly.
behind
That
the
is it.
scenes. The wealthy people.
'Cause
They're the ones who say what they want.
if you look at maybe US, Biden is only worth $100 million.
Who?
Biden,
Hidden.
Okay.
$100 million.
And
The
Bezos-
US in the US wewe ni peanuts huko. Like you can't say anything.
But there, I think
It's
that's
more about like
depends on the
depends on
environment.
Environment.
and the democracy around it.
Yeah, exactly.
True.
There are some countries whereby you can't have power without money.
Exactly.
Like our Uku.
Like huku hivi.
That's
Africa.
true.
Yeah, like Africa, most of the presidents or most of the they like you have to have some
Chums.
pockets. Like pockets have to be deep kiasi.
Deep state.
We're not developed. Like, umefanya nimerealize our democracy iko mbali from being developed.
So much of it goes into as Caleb said, they go hand in hand, but also depends on like different environments.
Yeah, I think that's true.
That is very, very
makes
true.
sense.
And as you said again, there are puppets of people working for guys with money. Even here in Kenya, most of the people who maybe fund these people are billionaires. See, and they put them there for their own self-interest. Like go and my interest should be secured. Because I think you have to. They're intertwined.
Very
Money and
intertwined.
power. Money and
Like,
power are very intertwined.
that was the question, but I think the answer is depends on the environment. We can say in Kenya, money is more important than
Yeah,
power.
I think it
But
depends
in
on
the
the,
US, power is more important than money.
yeah, even in
Because with money you
even
can
in-
buy power.
Yeah.
yeah.
With money, I can buy even the president if I want to.
Mm.
Can tell him, get this $10 billion. Ajaiona hiyo. And he'll give me everything.
Yeah.
Yeah, like literally.
But with money, you
With
can
money
buy
you can
a
buy
lot.
power.
Solomon said money, answer that.
Everything.
Everything. Yeah, with money you can buy anything you want. But again, depends also on the democracy. Do the people
Yeah.
want you?
Because some countries like China, you see it's a more of a communist.
Communist country, yeah.
Yeah, so I think, but a good question. I'll do more research on that. So my point on mentioning this top 10, these people, at number 11, we get the 69-year-old Jerome H. Powell, who is the Fed chair. Okay. And the next place you see
E
someone in charge, like a central bank or someone, is Mario Draghi. That was back then. I think this
ECB.
is ECB. But number 11, we have Jerome Powell. I don't know what metrics they use to look at world's most powerful people, but it is important to mention that. I mentioned that because now that brings me to the story of now the Feds, of why the Feds are very powerful and how important they are, not only in their economy, but in the whole economy, in the whole global economy. They normally say when America sneezes, the whole world catches a cold. It's true. If anything happens in America, that's it.
Like
Okay. So
Google is there.
I think we
Apple
can-
is there.
imagine
Facebook is there. Instagram is there.
all of them are there. Berkshire is there.
Berkshire is there. Mnafungiwa
Oracle
kwanza-
is there.
Oracle, Android. Mnafungiwa hizi vitu zote.
So I think, and you guys can help me, especially Taras, if you give a bit of a history of how the Feds, I believe the Feds came into act when they passed their bill in 1912, 1913.
1912, yeah.
1912, 1913. So this was a group of very rich economists, powerful people,
Yeah.
who came together and so, hey, over here, we can do this. I don't know how they cooked their way and they got
I
in.
think it was about the government was broke.
Because
It
from
had to borrow money
1907,
from rich people.
1907, they had a crash.
Yeah.
So the country was also
Country
in
was
tatters.
in a very tough point. And they had to borrow money from rich elite people. So these people, so we're giving so much money to this government. You see, so why can't we form a bank? But the government will just be borrowing from there. You see, so it's cool that you remember from Rockefeller, sijui from Andrew Carnegie, omba from that like independent. Not the people, not the something. They just formed something that government can borrow from,
Yeah.
but of course it was their own funds. Yeah.
Yes.
So much of the money which started the central bank government was individual money, like ilikuwa
True.
pesa ya wase,
My rich people.
rich people. So they had so much money. Even I think that story is touched even in the men who built America.
Yeah. I
The
think that's
story is
where I
touched,
heard
yeah.
it first.
So it's touched there. Like these people were now giving loans to the government, very, very a lot of money to the government. So they had to form an independent body whereby governments could borrow. And now from there, now it developed and became bigger and bigger and bigger. Now separated from the families, and that is where now the Federal Reserve started coming up.
Yeah, so if you want, you can go watch that documentary which Taras has mentioned. It's called The Men Who Built America. I think it was about 4 episodes, 4, 5. But anyway, search, it's on YouTube, you can find it. So yeah, 1912, 1913, the Federal Reserve was born. They came into power as an independent board acting for private investors. And they were in charge of the world's monetary system.
Yeah.
You don't know that's a lot of power given to a few number of men.
People, yeah.
So this is a single entity that is working as a profit. That's why they were given the power and the mandate they were in charge of printing money, and they print money and they loan it to the government or to the other big interbanks and at an interest rate. And when you look at this, they normally talk about it. It's funny. They give things at an interest that can never be paid back. What I mean, because these guys are hella rich. That's why the rich will continue getting rich. Just think of it this way. The feds print money out of thin air. So, for example, they've printed $1 billion. So $1 billion has come into existence. That means the central bank is $1 billion richer, more or less. They loan it to the government at 1%. So the government should pay $10 million on top of that. Where will that $10 million come from, Taras? There's only 1 billion in existence.
That's the question.
Where will the 10 million? More money needs to be printed in order for that billion to be printed. And that's why credit will never run out. There'll always be an interest to be paid on something. It cannot always balance books.
Yeah, true.
Because 100% was made, then you need to pay back on top with 1%, which does not exist. So it goes like that, a cycle. So they've printed free money, $1 billion out of thin air. Then there's another $10 million that will be added on top of that $1 billion for free again. So basically for these guys, they make money like that. So anyway, so the feds were introduced into the economy. I don't know how the others work. The Bank of England, those ones, they work. They're together with the because feds I've paid a lot of attention to them.
Feds is the central bank to the world.
Exactly.
True.
Yeah.
So the
All
other
central
central
bankers
banks
are
work with
under
the
the Fed.
Jesus, which is an independent
Body, yeah.
Yeah.
So even central
So
banks
that's why
here in
it's
Kenya are
Jackson
very
Hole.
independent. Yeah.
Symposium.
Yeah.
Exactly.
They now come and sit together because it's ni kazi yetu.
America.
Yeah. So all central banks around the world are under the Fed. So like that is why if you look at interest rates, even as we trade, we majorly focus on the dollar rates.
Exactly.
Yeah.
We don't
Yeah,
even
true.
focus on
Pound
Me,
rates.
I've never
sana
even
sana.
checked People's Bank of China
China
dollar
rate.
rates, guy.
Mostly
Doesn't
US.
really
It
matter,
affects.
Everywhere.
Yeah, exactly. Because
Because they're the ones lending
they're
to the
increasing rate on the reserve currency.
Yes, which is the dollar.
Exactly. Almost every other country has reserves in dollars.
Exactly.
True.
You see, and now that is the rate increasing. So it affect every other person.
Which
globally.
now, with that point of view, as I like normally giving it in my introduction class when I'm giving history of money, how the dollar became a very strong reserve currency is mostly during that time in the World War. Remember World War II, 1939 to 1949. What was happening? This was your Holocaust when this guy, what's his name, Hitler, was trying to kill the Jews. So the war started in the European side, and this time the US was very neutral. Yes, you guys need money, you need weapons, you let us know. Mpiganeni huku. Siki economy yetu, we keep growing it, and that time they were working on nuclear bombs. So these guys fight. So now that time Europe is fighting. What are they doing? They're taking loans from America. So America is sending them. These guys are sending gold from their country. So gold from around the world is coming into US, into the central banks there. And then these guys are sending a lot of weapons, food, power, guys who can help and fight, and cash. So the gold in India, that time there were cash gold standard.
Yeah.
So cash was going into the whole world. Africa at that time was still being colonized. So China and Africa for that time. European side, a lot of dollar was going. So during that time, dollar became very recognized around the world. People saw it as a stable currency. Nini. So the World War came and ended. Japan attacked US, Pearl Harbor, boom. US wakajam, sent back their two monsters, Nagasaki and Hiroshima. These guys raised their white flag. Hitler killed himself. So sort of peace treaty was enacted. These guys took a tulia, then they started working on how we can grow back the economy. So come later on when now the people were coming back for their gold, and that's how now, that's the reason why now the Central Bank of America, and why America has the most gold reserves in the world. They have about 8,000 and something tons. The next country that follows them is Germany with 3,000. So these guys have doubled the number 2 in terms of the gold reserves that they have in their country. So when these people are coming back for this gold, okay, take your dollars back, give us back our gold. They had printed too much money. So there's too much money compared to the gold they had in the bank. What happened? 1971, August 15th, President Nixon sat in front of the whole world and told them, we're no longer going to use the gold standard. The dollar is not backed up by gold. That was the biggest robbery that has happened in the world. No one knew what it meant. Very few people knew what it meant, understood what it meant. And now from then on, we entered into this, what we call the fiat currency. Basically, that's when now the Feds became now one of the most powerful people. Yeah. Because now the currency is now the world reserve currency. Everyone has dollars. Dollars is in circulation everywhere. Mm-hmm. The Feds now can print as much money because it's not linked to any gold. Yeah. Okay. So that's an important history that is the story I wanted you guys to share, so that you can get to know how the dollar, how powerful the Feds, and that's what I was talking about, Jerome Powell being the 10th most powerful person in the world, because whatever he says, everyone is listening. Like the way we were watching, I remember inauguration, anytime a president, Chebukati, Kenyan elections, when this guy was being sworn in, he said, not this guy, sorry. Not this guy. His Excellency. His Excellency. My guy. Apologies, don't come for me, Poleni. Yeah, he's already my president. His Excellency, Dr. William Samuel Arap. Yeah, our president, when he's being sworn. That time we had one of the most highest views live on YouTube on Citizen. But when we're watching the Feds every month, we are watching it like a live movie around the world. Millions and millions of people are paying attention to what he's saying. And yeah, that's why how it's the most powerful, a bit of the history that I wanted to give. And I think that's basically my point.
As we finalize, because of the interest of time also, I personally wanted to at least, let's talk about the legendary Fed chairman, Paul Volcker. That guy did wonders.
RIP to him.
Rest in peace, Paul Volcker. But what he did, I think, was outstanding.
He was Fed chair?
I think since 76, almost 10 years.
Yeah, from 76
to around 88 up there.
Yeah.
What wonders did he do?
At that time, when this guy came into power, into the Feds, there was the Iran war. We had just come out of the other war, Vietnam war. So oil shocks. So there was a lot of inflation running up in the States, like what we are seeing currently. But it was not as, I think that time we went to a high of 15%.
Yeah, inflation.
Yeah, inflation was about 15% inflation rate. And that was very, very worrying for the US. And Paul Volcker, as the Fed chairman, he started raising rates as we are seeing currently. And that is why I asked, how far can these rates go? Yeah. Like how far can Powell push these rates higher?
Volcker pushed them to 20%. 20.
Record interest rates in the US.
Ewe.
Recession. Hey. Unemployment.
19.
Dollar iliendadi 150.
150.
Saiko 113.
So exactly, that is why I'm saying we are almost in that same environment.
Jerome Powell did wonders.
Can we maybe get to a levels whereby we're raising rates that aggressively from 3.5 maybe to even 7?
Yeah, I think
10.
7. Personally, I'd go with 5 for now.
Yeah, for me actually I think 5 is stable.
Yeah, where inflation is still not at 15.
Yeah, it's not at 15. Yeah,
but also these things change a lot. They change a lot. Depends on how fast they can handle. But personally, I think I'd champion for 5 relative to where inflation is. Dollar, I think 120. That one I have it.
topping around those levels.
Okay, not topping, but at least we'll get there.
Mm.
120, I see it very, very soon. So
Okay, do you think the dollar will surpass pound to become world's strongest currency?
it's a tough one.
Mm.
So
Actually,
now
no,
it's number 2.
you know, actually,
How far are they?
It's now at 108.
We need 1,000 more
pound.
pips
but
to the
800
downside.
pound is not the strongest currency. It's the Kuwait dollar.
Yeah, the Kuwait.
Serious?
Yeah. There's another currency.
One Kuwait dollar is 3. One Kuwait dollar is 3.
I know that.
I think $3.
$3.
Yes. Mm.
Kuwait.
Let me confirm.
Hey, I didn't know that
I
one.
know that. I know that.
Serious?
Yeah.
Mm.
Yeah, that's good information. I didn't know.
I thought it was a pound.
Actually, $4.
Yeah, Kuwait
That one I knew.
dinar.
Yeah, that dinar.
Serious?
Mm.
$3.23.
Okay,
So it's the strongest currency.
good info. Okay. So hata achana na hiyo pound basi.
Pound like in it. We have 1,000 more pips to get to 1.
850. It's not at 1.1. It's at 1.08. That's yesterday. You think that fall was easy?
We will get to
Pound.
1. We can get to 1.
Pound dropped 300.
Yeah, we can get to 1.
50 pips.
We can get to 1
yesterday
easily.
alone.
You can get to 1
But
easily.
yesterday when I was checking,
because he's
I think
pound
it was 1.1 something.
1.0850.
1 easily.
3.5%.
Easily. Easily.
Parity.
Easily.
Yeah.
Because if
Easily.
this dollar can get to 120, then this one can easily
Exactly. That's
Yeah.
my thinking.
get. Okay. So you're finishing up, Rara.
Yeah. I think that was the point I wanted to pass through. And just as we summarize again, there's
Should
also
also
another
talk about Greenspan, the man of irrational
Greenspan.
exuberance.
they have a book. I have a book called The Greenspan's Fraud.
Yeah, so Alan Greenspan was the chairman of the Federal Reserve during the dot-com bubble.
He picked up actually from Paul Volcker.
Yeah, and he was responsible for saying the markets are irrational and they have gone
Rational
up.
exuberance.
Yeah, they've gone up so high, and markets went up another 80% after he said that.
Yeah.
And then markets stopped, and then we had the biggest bust, I think, the 2000 dot-com bubble, which burst in around 2002. We had a 2-year bear market.
Yeah.
Markets coming from
Maybe 2010.
Yeah. So then we went into the 2010 crisis. So also, those are chairmen you should actually check out
And I think
the eras of Volcker, the eras of Greenspan,
Yeah.
who's taken over after Janet Yellen, right?
after Janet Yellen. But Yellen I think had a soft time.
Yeah, Yellen had a very soft time. by
Like
the-
that time markets were stable, there was no high inflation.
Never had many
unemployment was stable. Yeah. Even I think trading during that time was not heavily about interest rates during those days.
Because
2015, 16, 17, 18, we never used to listen about interest rates having so much impact in the markets. But currently,
they're not
and for the
changing
next
that much.
exactly, they're not changing rates a lot. So, but for now, currently, if you are currently trading, you really have to understand much of the fundamentals. Understand like what happens when dollar is raising rates very, very strongly. I think positioning yourself in that line is very, very important. Yeah.
I'm looking at some data here. Hey, man, I thought the dollar was strong. Kumbe kuko number 8.
Yeah.
The
Bahrain is
Cayman
number 2.
Islands dollar, Gibraltar pound,
Man Islands kwanza ni storage ya mabilionea.
Jordan dinar, Omani rial, Bahrain dinar,
And you know-
Kuwaiti dinar.
Do you know why those dinar are strong?
No,
Because they are backed in gold. In oil. They are backed in oil. Like most
they
of
are
the
petrodollar.
petrodollar. Yeah, the petrodollar currencies. Yeah,
Okay.
they are backed in oil. Yeah.
Yeah, I'm
That's
seeing
one of
here
the
exports oil. Yeah, okay,
Most
I'll
of them
do.
are oil countries. Yeah.
So we can wind up. So you guys do research on that as well. Interesting. I've learned that
So
today.
this is a long topic. We can't finish everything that we want to share here.
Definitely.
Because it's very, very interesting. We are seeing currently in the current market environment, sisi tunaongelea vitu za history. We are seeing it currently, and if you're trading, most likely you need to also keep up with what's happening fundamentally. Watch out for those news. I always teach this in my fundamental class. I like telling my students how to prepare for fundamentals and how to position yourself alongside fundamentals, and that really helps a lot of people. But I think for today we can stop there. Probably we can maybe have another session to talk much about that, and probably deliver much more than we've done today. But as I always say, much about what we've learned fundamentally is about reading and research. So read a lot about markets, read a lot about the history of central bankers around the world. Currently, I'm reading a book about central banks' policies back in the 1929s. I just want to understand which policies do these people make when economies are crashing, maybe. And that is how you learn much about fundamentals. Me, Ken, and Caleb, we've never been into an economic class, but we really, really like understanding the economics of markets. So I think for that will be it for today. Catch us on the next podcast. Thank you.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.